Something very big is happening in Dubai, and it's easy to miss if you just read the headline. The government has confirmed 100 billion dirhams expansion of the Dubai International Financial Center that many are now calling DIFC 2.0. But this isn't just another real estate announcement. This is a strategic move that tells us exactly where Dubai sees itself in the global financial order over the next 20 years.
This project is being studied for the last a year and a half with a good team, and we are already starting, and we will not stop if somebody else doubts us.
Let me explain what this actually means for the city, for finance, and for investors. First of all, we need to understand what DIFC actually is and why this is so important. First, context. DIFC isn't just a business district, it's a financial engine room for the Middle East, Africa, and South Asia. Even though it sits in the Arab world, DIFC operates under its own legal system, its own courts, its own financial regulator based on English common law. That alone puts it in a very small global hub. Since launching in 2004, DIFC has evolved into a fully self-contained financial ecosystem. Today, it hosts global banks, private equity and asset managers, hedge funds, family offices, law firms, insurers, and advisory firms. There are now over 5,000 financial and professional services firms based here, and the working population has grown to nearly 50,000 professionals, expanding at around 8 to 10% per year. That growth rate matters because financial districts don't expand like that by accident. So where DIFC is expanding and why this is a tell. Now here's the part most people miss. The expansion is not pushing DIFC outward to cheaper land. It's moving inward toward Zabil, in the direction of the royal palace to the very core of the city. That land is government controlled, comes with the highest planning standard, and it is not released casually. This tells us something very clearly. This is not a short-term property cycle decision. This is a long-term national economic strategy. Dubai isn't reacting to demand, it's repositioning for future dominance. The expansion itself is not just about offices, it's about building a financial city. Another important point, this expansion is not simply more office space. This plan includes space for global financial institutions, dedicated hubs for fintech, AI, and digital finance, education, training, and research facilities, regional and global corporate headquarters, and critically residential living. DIFC is evolving from a financial district into a fully integrated financial city where talents can live, work, innovate, and stay long-term. That's how modern financial centers compete now, not just on tax, but on ecosystem quality. So you must be wondering why Dubai has won financial institutions so quickly. Especially post-COVID, Dubai has attracted a serious wave of global finance. And the reasons are very practical. First, regulation. DIFC regulation is clear, internationally aligned, and predictable. It's benchmarked against London and Singapore, and at the same time, Dubai has been early and clear on fintech, blockchain, digital assets. No gray zones, no guesswork. For institutions, that clarity is gold. Second, taxation. It's not just that Dubai's tax is low, it's that the rules are also stable. No personal income tax, no capital gains tax, corporation tax at 9% with defined frameworks. In a world of constantly shifting tax regimes, predictability has real value. Third, and that is very much underestimated, is the legal system. DIFC operates under English common law with independent courts and international arbitration. That means minimal legal friction, familiar contract, enforceability across borders for global firms. That removes enormous risk. Put all this together, and Dubai becomes an obvious base for for institutions targeting emerging markets. This expansion isn't just about size, it's about locking that advantage in for the next generation. So what this means for investors like you and me, I look at this into two ways. For long-term, residential-focused investors, the key areas to watch are obviously your residential opportunities within the DIFC itself and the core surrounding districts. Over time, spillover effects are likely to support downtown, Business Bay, and surrounding residential areas. These are long-term positioning plays, not quick flips. For more experienced investors, office assets matter here. As financial and professional services continue to grow, high-quality, well-located office space becomes structurally scarce. That tends to mean strong rental demand, institutional liquidity, and resilience across cycles. Overall, this DIFC expansion isn't a headline that disappears next week. It's a statement. Dubai is not just competing regionally anymore, it's positioning itself alongside the world's top financial centers. And when the city commits 100 billion dirhams to its financial core, everything built around it, homes, offices, infrastructure, tend to benefit over time. So if you want to know which project suits everyday investors, which suits finance professionals, or how to think about office investments around the DIFC, comment or message me DIFC, and I will see you in the next one.